Hello, I'm Bernard Hickey from interest.co.nz and welcome to 90 at 9. This is your morning briefing where you get everything you need to know in 90 seconds at 9 o'clock, starting now with news about the global slowdown continues to come through. The Dow has closed down 1% this morning on fears about earnings for many of these companies that are operating globally. Applied Micro Devices, the chip maker, reported a surprise drop in its sales, and Cummins, which makes engines for trucks, reported weak sales too. Analysts are forecasting US profits to fall 1.8% in the June quarter. That's the first fall since 2009. Stocks had been up earlier in the day. This followed news from Europe that it plans to jumpstart emergency loans to Spain's banks. The Spanish 10-year bond yield fell to 6.82%, below that key 7% level seen as unsustainable. There's talk that 30 billion euros will be injected into those Spanish banks later this month. Also talk that the European Central Bank may restart buying Italian bonds. But there are many uncertainties, and now we've found out that Greece needs yet more money. Bond redemptions are due in August. August the 20th is a deadline there, and they're asking for leniency on their current bailout plan. And finally, news from China that imports there have slowed to 6.3% in June from a year earlier, when economists had expected 11% growth. This is important because when the Chinese economy is weak, it's sucking in less imports from the likes of New Zealand and Australia. Also, export growth slowed to 11% in June from 15.3% in May. Export orders are contracting too. This is important because China was the country that managed to soften the blow of the global financial crisis for Australia and New Zealand. And it's certainly not rebounding like it did through 2008-2009. All this risk off the table meant the New Zealand dollar was weaker this morning at 79.4 US cents, but it is at near record highs against the euro, 64.8 euro cents. I'm Bernard Hickey for interest.co.nz. That was 90 seconds at 9 o'clock.